All right, we are live. Welcome, everybody. We are here with the part 3 of the Trading Foundation Mastery Series. I hope everybody's had a good week. It has been a spicy one. We got some pretty wild news with the trade stuff with Canada there. There's some other headlines floating around that I haven't even had a chance to wrap my head around. So what we are going to focus on, luckily, is evergreen here. It doesn't matter what kind of crazy headlines we get. We are going to be building on our previous couple weeks of webinars here and fleshing out our system. So we talked about how to kind of frame these systems, and last week we got into the details of how to enter and exit based on some basic technicals. So this week we are going to hone in on a simple framework for any kind of trade. So essentially a 3-step trade setup, and we're going to be talking about reversal plays, continuation plays, everything in the middle, and how to assess which kind of market condition each one will be best for. So we've got some good stuff here. I'm going to hop right on in. There we go. Alrighty, folks. My monitor also died last night, so I'm using one screen today. So forgive me if I don't see your questions immediately. I'll be trying to flip back and forth as much as possible, but bear with me, and we'll get some good stuff out of this, I think. So, like I said, 3-step trade setup here, simple framework for any market condition. Let's go. Real quick, homework check, guys. If anybody did analyze 10 different charts using the 5-step checklist that we developed last week, I'd love to hear about it. You can go ahead and throw that in the comments, throw that in the Discord. We can get some discussion going. And you're more than welcome to always hit me up throughout the week. I do my very best to get to each and every one of you because I like seeing what you're working on, and I like learning from you guys too. So just throwing that out there. If you guys did the homework, gold star from Professor Steve, and yeah, show me what you got. Moving on to the real meat and potatoes here. Here's what we're going to learn today. We're going to be talking about a 3-step systematic approach to every trade. You can employ this, and you should be employing this on every trade to help evaluate whether it's a trade you should be taking. Because if you're anything like me, before you had a rigorous system, it was very easy to psych yourself into trades that you probably wouldn't have taken in retrospect, looking back on them. So I think it's really important to kind of understand what you're looking for before you enter that trade, and to really have some actual metrics about how to gauge a potential setup. So we're going to learn that. We're going to learn when not to trade. Like I say, that is a big skill in and of itself. Just letting setups that don't feel A+ to you just pass you by. Not only is that valid, that will really increase your win percentage and your profitability overall. So I think that's another really crucial element to this whole system development process. We're going to be talking about some consistent exit and entry timings, and how to kind of develop that so it's not like a fluke when you really nail an entry or an exit. It's just part of your system and easily replicable. You can take it from one trade to the next. So going off of that, we're going to build confidence through repetition. Like I said, this is just going to be something that hopefully, if you keep practicing, will just become ingrained in your trading habits. And just like anything else, it's really important to develop the right habits. I don't know if we have any guitar players out there, but I was self-taught, and I didn't really realize for like the first 5 years that I had some really bad habits. And then I spent the next 5 years kind of unlearning those habits. Whereas if I had just started off with a strong foundation, I would have been off in a much better place overall. So I think this is widely applicable, and nowhere more so than trading. So that's what's on tap for today here. Getting right into it. Let's talk about the problem. So why do traders struggle with execution? What is it that's preventing us from succeeding on a regular basis? Well, I think you can really break it down into 4 kind of major parts here. The first is when you see the setup, but you just don't know if it's actually time to enter. Maybe it's less you're scared to enter, and more just the confusion of I see where I think it's going, but I don't know the path there. So I don't know the optimal place to get in. So I think that's super important, and we're definitely going to talk about that. The next one is fear-based. That's when you just are like, I know what I'm looking for, and I think this is it, but I can't pull the trigger. And you'll get this a lot if you've taken some bad trades, especially if a couple back-to-back, and it'll scare you out of taking the good trades. So I think it's really important to work with this fear. It's completely natural. Every trader gets it, but it's really essential to not let it rule your next trade. It's really essential to try to reset between trades and to really just take each setup at in a vacuum, so to speak, on its own. So we have those two. Those are very important. And the other one is just everything feels confusing and different. So this might apply to you if you kind of trade around multiple different systems and bounce back and forth. And if you don't have a few kind of like bread and butter plays, your go-to plays, go-to setups, then you can find yourself feeling like, well, maybe this was a valid entry for this one setup, but it's not for this. And it's hard to transfer your abilities, your skill set from one setup to another. So I think that just honing it down to a few setups that are really reliable, and then just really hammering those, because these are setups that still appear multiple times a week, often multiple times a day. And because of that, you can still get a lot of trading action and practice without having to dabble in a bunch of different things that maybe aren't as high probability. Maybe they don't suit yourself as a trader. So I think that's a really important aspect that's often not talked about. And the last thing, the last thing here should say, let's see, let me check my notes here. Okay. All right. Like I said, I'm working off one monitor here, and looks like I had a little bit of an error there. I think there were only three that I really wanted to talk about. These are the ones that jumped into my mind. So we're gonna pretend this doesn't exist and just plow right ahead. Going on to the solution here, it's a universal three-step framework, and I think it's really important to like I said, systematize every aspect of this. So what we're going to be talking about is in just on its own, how to identify each setup. What are we looking for in particular? And then when do we actually enter it? When do we pull the trigger and really execute that trade? So those are the first two. And then the last is obviously management and exiting. And I kind of combined those because I think it's basically the same thing. When you're managing a trade, you're exiting at least part of a position. And obviously when you're exiting, you're closing it completely. So whether you're managing it in terms of taking profits or you're managing it in terms of stopping yourself out, both are essential and both are tied to the same skill set of just exiting a position. So we're going to jump into each one of these in detail. We've got setup identification first. And that is essentially when your job is to scan for potential opportunities. And the whole thing that you should be focused on here is, does this match my trading plan criteria? So we talked a bit in the past couple webinars about what that trading criteria is. And I think we're going to get a little bit more in depth today. You'll start to kind of be building on these previous concepts and getting more granular, getting more focused. And like I said, this is a step-by-step process, and you're building something that you can take with you no matter what markets or stocks you're trading. It'll always be equally applicable. And so essentially, I kind of boiled it down to the basics of my trading strategy and what I'm looking for. So I'm looking for support and resistance interaction. I want to see how prices respond to key levels. I want to see what is developing in terms of trend lines. Is it testing a multiple trend line in the same way that it is a support or resistance level, and kind of coiling under it, cooking it, or rejecting off of it? That'll definitely inform my trade, my bias, and whether it's a valid setup. A chart pattern development overall. So how the whole chart is progressing, and if a small consolidation break could lead to a bigger, more sustained move, essentially. So I'm much more interested in trading cup and handles, for example, than just like a 1 or 2 day consolidation that does break, because even though that's a valid, you can call that a flag breakout, if it doesn't have the context of a larger setup behind it, I'm just less inclined to take the trade and less inclined to kind of give it that A+, all systems go, rating that I really need to size up and take an aggressive trade. So on top of those, it's just about volume, building or declining. And you just want to see basically, you want to see an accumulation of buyers, assuming you're looking for a long, or an outpacing of sellers compared to buyers if you're looking for a short. So those I think are pretty key factors in identifying a setup. And I've just been told the audio broke. Let me try to fix that. If I could get a 1 in the chat, if you guys could hear me. I see you guys. DJ 2 a.m. little buddy. Audio's good here, according to my man DJ 2 a.m. All right, I appreciate you guys. Thank you. Sorry if it cut out there for a second. Awesome. Good on YouTube too. Thank you guys. Appreciate that. So moving on to the entry confirmation. This is where your job is essentially to wait for that green light signal. So we have the setup. We've identified that it looks like a potential long. And now our job is to essentially pull the trigger here. So after we're going to run through this, we run through the steps. I'll pull up a trade that I took today, and we can talk about all these same things and kind of put them into action. But first, I want to walk you through these 3 steps so you kind of get an overhead view of what we're looking at here. So we're looking for that green light. We're looking for when it's ready to pull the trigger. So usually it's going to be a specific catalyst like volume above average through a key level. Something like that is a very common setup for me, or a breakdown and reclaim of a key level, again, with that volume confirmation. And these are some of my most basic setups that I take multiple times a week, and I have a very high consistency rate with them because they're not super advanced. They're relatively basic, but they're just very effective and they're easy to identify. So I don't need to be like playing 4D chess and seeing into the future and thinking about all these different contingencies. I just know, hey, I've seen this setup hundreds, if not thousands of times before, and I know that very often it plays out. So I'm gonna trust the process, trust my system, respect my stops, and respect my take profit targets. And overall, if I keep doing this day in and day out, week in and week out, sometimes you don't get a setup every day, but then I'll be consistently profitable. So moving on to management and execution. And again, this is just kind of the overhead view look here. We are going to be talking about how to maximize profit from the move and essentially extract the maximum amount of gains that we can out of any given setup. So this is where it's really important to have a plan and stick to it, because as a stock is moving in your favor, it's so easy to move the goalposts and just say, hey, I think that we can kind of push this a little bit more than I would have otherwise when I took the setup. And essentially it kind of warps your perspective on the given setup. So it's super important to be diligent, and you're looking for essentially the initial stop loss to protect your gains, to protect your capital, and then profit targets to lock in gains and give you a cushion that you can build off of. And then trailing stops if your winner is really running, because you just don't want to give back a large percentage of that runner, and partial exits to reduce the risk while holding a core position. So if anybody's traded with me, I'm huge on core positions and trading around them. So for example, today, my only real trade was essentially buying the afternoon dip into power hour about 2 hours before power hour. When we started to bottom there, we were bottoming into a key level that I was really looking for, basically previous all-time highs. We were seeing a bit of exhaustion in the seller's volume. The seller's volume was decreasing and they could not push the price down. And we were seeing that mixed tape action where before it was just straight red through the news catalyst. And then it started to kind of chop. It started to base out, and it wasn't perfect. It bounced a good amount, then it undercut that, bounced again, undercut that again. So I know a lot of people did get shaken out, and my core position was underwater for part of the time. So I think it's really important to kind of have contingency plans. For me, it was, hey, if we close a 5-minute candle under that first swing low where I identified buyers and I took a long, then I'm out and I take a small loss because it wasn't that big of a difference, between the first low in the afternoon and the second low. But it was really important for me to have that parameter and to keep watching those 5-minute closes. But luckily today they did post bottom wicks in that area. The thesis that was a legitimate buy zone was intact, and we did eventually get the range break and then a nice explosive move up to VWAP, which was my exit target there. So in that process, though, I was holding the core. The core was a bit red. It started to show another incentive of bottoming. I added a little bit. It popped up, and I went to break even on the trade, and then I took that add off. So I was trading around that core position. And I think that's a really, really useful skill. I think that'll really help you guys in the long run. And it also just really helps you put yourself in the mindset of being a nimble trader and not being this all or nothing. It has to hit my stretch goal or else I'll just let it go red. It kind of helps you with that execution paralysis that you can often get, especially if you're watching a setup for a long time and you really have a lot of conviction. If it doesn't go the way you expect, it can be really hard to pull the trigger and either get out of the trade or just, take a bunch off at break even and reassess, say like, okay, this was high confidence, but now the way it's acting, it's not, so I should size down. So that kind of ability to pivot, I think, is really cultivated with these kind of trading systems where you're trading around a core position, you're getting in and out, you're essentially getting more screen time, more practice, more muscle memory being built up by taking these partial trades around a core position. And then the biggest thing for me is that it really helps prevent FOMO or fear to shake you out of a trade. For me, if I was fully sized on the first dip where I said, hey, I think that there's good upside, good risk reward to the upside, but I'm not 100% sure that we're bottoming yet. I might be early. So if I was full size, that would really scare me to be down what would be a significant amount on a full size position. But if it's like a third of what I really want, then all of a sudden it's an opportunity to add in as long as it acts right. Let's see. So yeah, we've got that kind of basic premise there, and we'll get into the exact execution. I'll pull up the chart in a bit, but I just wanted to kind of put it, lay it all out there. I think these are the 3 essential steps to any trading system. So going forward, let's talk about the different kind of setups that we can apply this framework to. So the first one is the breakout strategy. Everybody's favorite, right? We all love trading breakouts. So the first step is to identify a consolidation pattern. And that's just because, hey, if we want to catch an explosive move, there needs to be a very tight consolidation process, right? And that's just kind of basic physics. So, if there's low volatility, eventually that will shift. Basically a consolidation is a price reaching equilibrium, price reaching an agreed upon target between buyers and sellers. So you have a big move and then it starts to tighten up. And that tightening up process is essentially the market saying, okay, we think we're all coming together. We're deciding collectively that this is fair value at the current moment. So you have the consolidation, and then eventually something's going to change, whether it's just, buyers will outpace sellers, whether there's a specific catalyst. But either way, basically that equilibrium will shift. And so what our goal is to identify the consolidation so that we can get in right before that pivotal moment where the volatility starts expanding and we get price expansion. So that's why we're looking for a consolidation. We are looking for this consolidation near key resistances or supports, essentially near a key level. So it's really nice when we have a surge up to a key resistance and then we just coil right underneath that, right? We're basically saying, okay, here's the logical place for sellers to step in, but they're not able to reverse the initial move up. All they're able to do is to sell into it, and then buyers step back in, and then they sell into it, buyers step back in, and they keep doing that little dance, and they essentially create a consolidation pattern. So we really like seeing that near a key resistance, or if you're trading the other way, a key support, and you're essentially looking for that tight range and decreasing volume. So I want to talk about why the decreasing volume is so important. Decreasing volume in that consolidation essentially shows you that there are shares running out at this level, which the market has decided is fair value. So essentially think about it at a store, right? There's they get one shipment in and everybody loves whatever it is and they buy it all up. And then, if you're a savvy businessman, you're probably going to say, hey, for the next shipment, I could increase the price, and probably people are going to buy more. Or, on the scalping market, for sure, people buy it up at fair market value, but the demand is greater. So they're able to mark it up and see that price expansion. So just in the same way, it's just the stock market is like any other market, right? It's just buyers and sellers. So if we are at a level, a key resistance in particular, and there's decreasing volume, but price is holding, what it's telling us is that there are fewer and fewer people that are willing to part with their shares here. There are more and more people saying, hey, it's a bargain here. We think it's going up. So why would we sell here? So naturally, there will be an imbalance of more buyers to less sellers. And over time, when there are no shares left, essentially at this price level, the buyers will start bidding up the price and paying more and more and more. So that's why the decreasing volume is very important. And when you see that decreasing volume in conjunction with a consolidation pattern, it's a real good indicator of this move being close to breaking out. And one more thing just to talk about, I know I'm getting a little in the weeds here, but there's a concept called a trigger bar. which is essentially at the end of this consolidation pattern, you will get a very, very small bodied candle. And it also will be combined with a very short or a very low amount of volume on that candle. And, in this context, I'm referring to a daily chart, but this happens just the same on everything down to a 1-minute chart. It's all the same concept, and it all happens, because of the same underlying principles. So these are some of the things that you're looking for this breakout strategy. And so next step after we identify that is to wait for the volume to break out above the resistance. And essentially you want the price and the volume to confirm together. And I know, guys, I keep saying it because it's so, so important. No matter just about whatever we're talking about, we need to see volume and price action moving in tandem. So that looks like a big breakout stick, a nice green candle through the consolidation, taking out a previous, one of the previous lower highs, and essentially breaking that tightening pattern and expanding through it. So we look for that, and then we essentially are going to target a measured move up. So what do I mean when I say a measured move? A measured move is essentially exactly what it sounds like. Sorry, I'm just getting a chance to hop over and check the comments. I am not the keeper of the free accounts. That is something to discuss in the Discord. We do a lot of events. We just had a really fun event where we gave out a ton of free accounts. We all traded together. It was a blast. And okay, now I'm seeing that Tim already replied to that. Sorry, I'm just playing catch up here. This one, yes, I will absolutely show on a chart. I'm just working off one window this week, so it'll be a little bit disruptive to switch back and forth right now, but I promise we're going to talk through an example, and I'll be answering questions live there as well. For this third part, the measured move, essentially what we're looking for is we're going to measure the size of the consolidation pattern, and then we're going to extrapolate that up. So say a stock broke out from $10 up to 15, and then it's trading between 15 and 13, and it's consolidating between there. When it breaks 15, I'm going to be looking for a $2 move up because that's the size of the consolidation pattern. There are also other ways that you can do measured moves. For example, some people will do the entire length of the flag pole. So that initial $10 to $15 move, and you could target $20, an additional $5. And it's also really important to just remember that no one measured move will always work. So it's always important to watch what price does $2 up, on that measured move of the consolidation break. And then ideally shoot for the larger move. But it's also just, it could be a level where sellers step in and beat the stock back down. So that's why we take partial profits at these levels. And that's why, over time, the system is more consistently profitable than being very stubborn about a very specific exit level for every single strategy. So in some ways, this is universally applicable, but in others, one of the facets that's universally applicable is that you have to be flexible and play each chart individually. So for example, we're never going to not wait for the volume confirmation, but we're not always going to take all of our profit right at the double the consolidation level, but we are always going to watch there. So give me one moment to reply here. Okay, and moving on, I want to talk about reversal strategies. So we talked about the breakouts, and now we're going to talk about reversals. A reversal strategy is essentially getting in on a stock when it is starting to reverse, a major trend, or any trend, I guess you could say. But, we really like catching the major trend reversals because they obviously offer the most explosive risk reward there. So the first thing is to identify oversold conditions, and you're looking to do these into major supports. So just like for breakouts, we want to see price consolidating under a resistance, and we're looking for action to break above this. But that's when we're looking in the context of a breakout. So in a breakout context, we are expecting the stock to go up and break a range. For a reversal strategy, we are expecting a stock to hold a range. So when we're expecting something to hold a range, we're looking for oversold conditions at major supports. So for today, the trade I took today in the afternoon is a perfect example of this. So on the intraday chart, we were oversold and we were coming into a major support in that previous all-time high, and basically also an ATR projected move down. So what I'm saying when I say that is, if the stock, if SPY were to fade like it did, what is the area that mathematically it is considered oversold on a short time frame, and what is the area that I should be looking for that reversal to occur in? So using these tools and basically noting the seller exhaustion on the tape, I was able to kind of identify this oversold condition and identify that it was at a significant support. So that was informing my bias for taking this trade. So then we're going to wait for the reversal candlestick pattern. We want to see something like a hammer, something with a big bottom wick closing near the top of the candle. A doji is often acceptable because that's essentially showing mixed tape, which means equalizing buyers and sellers, whereas previously we were seeing sellers outpace buyers. Then the last thing is also my favorite, which is an engulfing pattern. So an engulfing pattern is when the previous candlestick down gets reversed and the next candle or a following candle breaks above the top of that one. And what that shows to me is that we didn't have buyers until we reached this zone, and then we had enough buyers to counteract the weak sellers. And that to me shows an inflection point, and as essentially is a very highly reliable sign of reversal. So we did see today in that afternoon, we saw a 5-minute engulfing candle, and it's not always super clean, right? Because these patterns can take some time to kind of shake out, and we're always at the whim of buyers and sellers. So if another seller steps in, we could flush out that previous support level and then need to reclaim it. So we did see the 5-minute engulfing candle get swept out, but then we continued to see these low volume sells followed up by higher volume buys. And that's a really good sign of saying, okay, shares at this level are being transferred from shorts who are taking profit to longs who want to play this reversal. So we have identified oversold conditions, and then we're waiting for a bit of a confirmation in a form of a candlestick pattern that is inherently bullish, one that is showing that within a period of time, the buyers are outpacing the sellers for the first time in this case, like a couple hours. So after that, we want to target a previous resistance level. So basically the high of the range or VWAP or anywhere where there were sellers previously, then price came down, flushed out, and now we want to come back up and retest that. So we are going to put our stop loss below the support that held. Today it was like 611, I believe. And then we are going to be targeting the previous resistance level, which was VWAP, where we started selling off from. So that is kind of the framework of a reversal strategy. These are one of my favorites. I think that they are a little less reliable and a little bit more advanced, but they just, there's something that feels so good about catching a trend as it's reversing. And so I really do love to trade these. And I think that my love for them essentially is going to make me more focused, make me see them jump out at me more. And because of that, I think I have a better win rate on reversals than maybe the overall. And, there's definitely strategies that I underperform in too. So I think this is part of just kind of knowing what works for you. Going to switch over and see if I have any questions here real quick. Metin, I'd be happy to. Oh, Tim is already on it. Tim is killing it as usual. Awesome. So moving on, let's talk about when we apply these different setups to different conditions, right? Different market conditions. So in a trending market like we're seeing recently, we're essentially focusing on continuation patterns. We need the market to prove to us that it's not going to keep going up, because fading the trend is a bad idea unless you have very specific metrics like we talked about with the reversal. So if we don't have those conditions, then what we're essentially looking for is to continue playing the upside in a market that's trending up. And so then the best way to kind of capitalize that is look for pullbacks in that trending market. So I was talking about the setup today as a reversal pattern, and it was intraday. But on an hourly chart or on a daily chart, this was just a small pullback into key supports. And then that's where we're looking to continue the move long. So that's super key, I think. We're going to always be looking to play continuation unless we have a valid thesis as to why that might be changing. So that could include anything from seeing a lot of flow coming in, especially risk reversal flow, which is when, for example, you might sell puts on a stock and then use the capital that you acquire from selling the puts to buy calls. If you see a large number of those types of orders, that's a good sign that smart money has reason to believe that the stock might reverse. Maybe it's as simple as like we talked about, declining, weakening sellers into a key level. That's always a good thing. And then we could expect to some extent a bounce off of that. And once you get in the green on these reversal plays, you can very easily just put your stop at break even. And hey, if you're wrong, you're wrong. If you're right, you catch this huge move from a very, very crisp entry. So that's what we're looking for in trending markets, which is what we are in. Despite the shaky price action today, we're definitely still trending up by all metrics until major levels are lost. So we got to expect that. But how do we trade ranging markets? These can be really tough, right? So I think that it's important in these markets to set up or to focus on these reversal setups. So these are my favorites, and that's why I do love ranging markets. Most people hate them. They just want a straight trend, but straight trends often psych me out because I'm like, it can't keep going. And then, classic rookie move, it can always keep going. But ranging markets are when the kind of the bumper rails are on in the bowling alley, so to speak. Things are kind of being guided through mean reversion. They're kind of digesting a previous big move. And because of that, for me at least, it's very manageable, very predictable price action quite often. You will see a lot of moves catching at kind of extreme levels or, intraday, like essentially like ATR targets or Camarilla levels, something like that. And then they will fade those and you can take those trades back to VWAP and then it'll often overshoot VWAP. And then you'll see the tape start to shift again. And then you can take it right back to VWAP again. And you can get a lot of actually good trades in a market that may close completely flat from where it opened. So I think that it's important to have an understanding of both setups because, there's always going to be days where we're ranging. There's always going to be days where we're trending. And if you're only a trend trader, if you're only a range trader, then you're just going to be sitting out a lot of the time, first off. And also it's going to be harder for you to pivot and know when to take profit and call it quits on a trending setup, for example, because you're simply not as aware of these signs of reversal, these signs of ranging, of us entering a ranging market. So because of that, I think they're both really important. And for ranging markets, you focus on reversal setups and essentially bounces back to equilibrium. So there's also the factor of volatility. If you're in higher volatility setups or higher volatility market conditions, you're going to need to adjust your strategy. You're going to need wider stops because there's going to be more whippy action, more stop runs, more volatility, of course. And because of that, you're going to need to compensate with the wider stops by taking smaller sizes. So I know a lot of people don't like doing this. They like trading the same size no matter what. And they're like, well, if there's high volatility, I'll just make more money. It's like, that would be nice. But overall, it's really important to remember your max exposure, how much max exposure you have on. And if you're able to identify that we are in a high volatility regime, you need to respect that and you need to size smaller. And it's not it's one of those rules that it's like, the ones as a kid where you're like, yeah, well, mom says so, but you don't really believe it's true until you feel the repercussions yourself. And then you're like, okay, maybe mom was right. So I think that you probably won't trust me if you haven't experienced this, but if you have experienced this, you're like, he's got a point. So just, it never hurts to size down as volatility is increasing and you will make the same amount of money or more on these big range expansion moves, even if it's a smaller position size. And hey, on the reverse side with low volatility, if we are in a low volatility regime, you can size up. You still have to respect your stops, of course, but you are allowed to put more capital to work because the capital will not get as far in terms of you will get less, obviously less of a dollar move or less overall of a move. So you need to compensate with a little bit of extra size. And because of this, the lack of volatility, you can also run tighter stops. So that's really what allows us to take on a bigger size. I'm not saying go crazy, but I am saying that the lower the volatility, the more capital you can have in any given trade, because your stop will be much tighter. So also another thing, in low volatility, remember, like I said, we were looking for that consolidation for the breakout setup. This is the type of setup or type of a market environment where you're looking for breakouts. And so that's another thing. A lot of people don't like low volatility situations, market conditions, but for me, they're great, because that means that right around the corner, we're going to have some real explosive moves, and we have a chance to get a head start on that and identify them before they make those explosive moves. So yeah, I think that's a decent breakdown of how we can adapt to any market condition and use these kind of templates, these cookie cutter strategies, in a way that isn't so cut and dry, in a way where we are the artists applying the right tool for the right situation. And I think that's where a lot of the skill comes in, because to be honest, none of these systems that I'm describing are incredibly advanced. I think just about anybody can learn them and learn how to trade them. The key is to identify when the time is to pull the hammer out of the toolbox, when the time is to use the saw. That's a bad analogy, but it's good enough. You get what I'm saying. There's a right tool for every condition, essentially. So we've talked about when to trade and how to identify that, but how do we identify when not to trade? So some critical filters that I think are super key here are essentially, let's see. I'm sorry. I think okay. I'm working off a draft here, apparently. So ignore the words. I'm just going to talk you through this. When not to trade. So the critical factors are essentially when things aren't working. So if you expect something to happen in the market and there's just unpredictability or volatility, then that's a really good indicator that you should probably not trade and wait to see the conditions develop in a way that is more manageable, more something that you understand better. So that's really important, essentially, to have a good grasp on what you're seeing on your screen, because if you don't, that's when you can get into trouble, and that's when you kind of move the goalposts. So that's a really big thing. Another thing is just if you're not seeing, how when you're in a setup and just one thing feels off. So it doesn't have to be the market is total chaos and you don't know what's going on at all. Obviously, don't trade that. But it could also be, hey, 3 of these criteria for a setup are hitting, but I'm not seeing any volume following through, for example. So that can be a really key one, where the chart looks good, but then you look at the volume and it's like something's just off. Or maybe you're playing an extension breakout play and you think that it could keep going, but you're not seeing the velocity on the candles anymore. You're starting to kind of feel that shift, that rounding top occur, and you still are making higher highs, but each push feels a little bit weaker. It feels a little bit more like there might be some kind of reversal brewing. And often we pick up on these things subconsciously. So it's not necessarily something that you'll notice, at least early on, as a conscious thing, but you will probably have a bad feeling. And you probably know when you get that bad feeling that it's often time to just shut it down and let the trade or let the setup continue to progress and develop into something that is more solid. So often, if you don't trust these kind of gut feelings, you'll be caught up into things like fake breakouts or fake breakdowns. And these can be really painful, right? Because the move that you're looking for eventually does materialize, but you simply aren't around for it because you already got your emotional capital and your actual capital burned by being in at the wrong time when there was something missing from the setup. So those are the 2 biggest ones for me. Another thing is trading around news. If there's a bunch of news catalysts, unless you're really confident in the outcome of the news, it is much more highly reliable over the long term to just wait for the news to settle. So there's going to be a big move, and then there's going to be consolidation, and then you can play the break from that consolidation, ideally in the same direction of the news. So that's just something to consider there. You don't have to take every trade. You don't have to trade on FOMC days. I know there's a lot of people who really love it, but I never really understand it because there's just so much less predictability on these kind of binary news days. So for me personally, I like to trade the aftermath of that. I will, fade the extremes of these move back to VWAP, and then I'll wait and see which direction it breaks away from VWAP, something like that. or, there's many ways to do it, of course. But in general, I think that it's just really important to not trade if things don't seem conducive to high probability trading. So yeah, news, just feeling off in general, or just not knowing to what you're seeing on the charts. Those are the best times to go outside and do something else, So moving on to your personal setup checklist. Again, this is not the right draft. So I'm going to hop back into this here. I'm just gonna talk to you here. So your personal setup checklist is going to be pretty simple. The first thing is that we are going to have to identify that setup, right? So is it a market condition that's trending up? The first thing is to identify what market condition we're in. Are we in an uptrending market? Are we in a sideways moving consolidation market? And what are we going to do for each of those? So this is like a flow chart here. So if we are in a trending market, we are going to be looking for continuation plays. If we're looking for continuation plays, we're going to be looking for pullbacks to get long in for the most part. Because very often, sorry, lots of things popping up on my screen. There we go. Very often, the trend is up, right? The markets are in general bullish. In general, we want to see price expansion. So the most common setup is going to be pullbacks into key supports. So first thing is to identify the trending market. Second is to identify those key supports. Third thing is to set alerts at or near those key supports. So you're not getting in early. You're not getting overly zealous and jumping in too early. You're waiting for the trade to come to your level. And then you're going to essentially figure out what your actual entry point is. Usually that's going to be a reclaim of a key level. Either price comes down and it consolidates into the key level, or it undercuts the key level and reclaims it. So these are the two most common situations, and these are going to be your entry parameters. You need to see a reclaim of that key level, or a slowing of selling, and essentially that trend reversal happening into that key level. Once you have the level that you're looking for the breakout, or for the setup, whether it's a breakout or a reversal, you're going to be taking the position, of course. And then your next checklist item here is, when you take the trade, you need to know where your stop is and where your exit is. So your exit is always going to be under your key support. Ideally, you've already had that fake breakdown in the reclaim. I really want to focus on that in particular, because that is, for me, a requirement. Some people, it's not. For some people, if it's just coiling above that support and they start to see that upturn, that's enough for them. For me, I've gotten burnt enough times that I'm fine with missing some setups and just waiting for them to flush out all the people with their stops right under there and pop it back up over the key level. When you get that, you have a very high probability and common sense place to put your stop. You're going to be putting your stop under that fake breakdown, under that liquidity raid, and you're going to be setting your target on a measured move to the upside. For intraday trades, very often this will be VWAP, or it'll be a level that we broke down from initially. So you can look at the volume profile for this. You can have a high volume node up above, and you can essentially, be down at the support, and you trade sideways for a while. You swipe under, you reclaim, and then the volume profile is going to be a B, right? We're going to have this high volume profile node up here, and then we have the high volume profile node down here, which we are consolidating in. And then you can take that trade from one to the other there. So that's kind of your basic checklist. The very last thing is, of course, to respect your system. We know what we're looking for, and we're going to have to respect these stops and these take profit levels if we want to do this consistently, day in and day out, and be consistently profitable. So moving on, we have our setup checklist. I would like to hop back in here and just talk about a few more mistakes. Somehow this slide ended up in here when it was supposed to be before. So we'll just go over them again because they're really important. You don't want to skip step one. You don't want to enter without the proper setup. Step two is rushing and not waiting for that confirmation. And step 3 is, if you're ignoring step 3, you're basically saying, I like the setup. I'm just gonna feel it out. We're just gonna vibes trade this thing. And it is not the best way to go about it. As somebody who does like vibes trading, I have to check this in myself and say, no, I had a plan. I'm going to stick to the plan, even if things are developing a little differently, So you got to have your exit plan, and you got to respect your exit plan. No goalpost moving. That's what really kills traders. And the last thing is just this time is different syndrome, as I like to call it. We always want to believe that, we are right at the precipice of some major event, some major regime change, some major shift. And I think that this is very prevalent in trading. Everybody thinks this is the big breakout. This is the big move. And because of that, you can find yourself in very sticky situations. So just keep a level head and remember, you don't need to fortune tell. Everybody wants to be a fortune teller and predict what's going to happen next. All we need to do is be analytical and trade what we see. And if the setup is there, we take it. And if it doesn't work, we don't beat ourselves up because we respected our rules. And that's just the game we're playing, right? So know this time is different syndrome. That's that's really key. So you stick to the process, and it works when you work it. If you don't stick to it, it won't do much for you. So how can we measure whether we're following this framework that we've set for ourselves? This is what I like to track weekly. You can add things. You can just focus on the most important ones. But this really helps me gauge whether I am trading my plan. So the first thing is really important. What percentage of the trades that you took followed all 3 steps? Hopefully it's 100, but realistically, we're all human. And even I sometimes will break the system. And the most beneficial thing I can do when I break the system is keep track of them, because I have numbers, and it's very clear that if I stick to the system, I do better. And seeing those numbers, start to materialize day after day, week after week, it really helps you kind of form a conviction that's required to have the diligence to trade a system regularly. I think all of the best traders do have a lot of diligence in following their system, and they definitely all have a system. So that's really important to see what the reward is for following it. And that reward is a higher percentage of winning trades. And so that's also what I just talked about here, point 2, that win rate compared to when you're comparing a completed framework trade to just a random one, it'll be very significant. For me personally, it's like a 20% difference. So for me, it's always worth it to stick to the system. Sometimes I'm human. Sometimes I see something that's just too good to pass up. But, more often than not, I wish that I had just only traded the actual system. So the other thing is you can measure the average risk reward on these framework trades versus the others. And you'll find that you will have a much smoother equity curve. You will have less outliers of big wins and big losses, but you will be making more money overall. And I think that's what we should all be kind of striving towards, because the big wins and the big losses, they're just not good for your mental, and they're not good for being a consistent trader. Big losses obviously hurt. They make you scared. They make you do things that you probably shouldn't. You'll get shaken out of trades before they hit your stop loss, and then you'll see them rocket off, and then you'll chase them when they're too high, and they'll come back on you, and you'll get scared and sell again, that kind of thing. And then on the other side of the coin, if you're hitting a massive winner, congratulations, of course, but it does induce euphoria. It does kind of affect your thought process going into the next trade. And so here's a little bit of unsolicited advice that really helped me. When you get those big wins, take a break, enjoy it, go buy yourself something nice, go, or treat yourself to, enjoying a hobby that you like because you just paid for time to do whatever you want. Right. And the biggest thing for me is when I started doing this, I started noticing that I was giving back far less of those big wins in the following week. And I was usually able to continue the momentum because not only did I have a big win, I didn't let it get to my head too much. I said, hey, I got lucky. That's awesome. And I went and had a really nice day or week, and that's, I think, a lot more conducive to continuing to compound your account, as opposed to that kind of gambler's instinct we get when we hit big and we want to double down again. That's what really, really kills traders. So that also leads right into the point 4 here, your emotional state, calm versus stress trading. you will perform far better when you're calm. So anything we can do to keep you in that calm state and away from the stress is ideal. Often when you follow this setup, you'll notice that the trades aren't that stressful. And the biggest factor for me is that you already have defined your risk. So you can literally walk away from your computer and just say, hey, let the chips fall where they may. I have the stats to back up that this system will work. If it doesn't this time, I won't take it personal. I can move on and not be beating myself up with the woulda, coulda, shouldas, because hey, that's just, like I said, the game that we play. So first off, I want to, well, not first off, we're almost at the end here, but for the slide, I want to talk about how we can integrate this with the previous weeks and what we've talked about there. So we talked about how to kind of frame a system in general, and then we talked about specific technicals that can help us identify these entries. And now we have more of a kind of cohesive step-by-step process using those technicals, using the overall framework. And like, what does it look like? So week one, we talked about how you must only trade the frameworks that match your plan. And week two, we talked about using like support and resistance and trend analysis to identify those identify those setups. And this week we're talking about execution and a systematic approach to that execution. So we're just basically eliminating the guesswork. So that's kind of where we're at. We're about halfway through with getting you to a point where I think even a beginner trader could have a cohesive system that's fleshed out enough that they can take it to whatever asset class that they might be trading and have good success with it if they stick to it. And again, that's the big part. You got to stick to it. I know it's hard, but that's where the real hard work comes in. So next week, we're going to be building off of this, and we're going to be talking about position sizing. And then following up with that, we're going to be talking about psychology. So the position sizing next week will be really key because we talked a little bit about it this week. I'm kind of trying to do that, like tease concepts and then really expand on them. So we talked about how in high volatility environments, we're going to be trading smaller size. And we talked about in low volatility environments, how we're going to be trading larger size with tighter stops. The tricky part is that's still pretty abstract, right? Like, what is wider? What is a big stop? What is a small stop? Is it the same one stock to another? It is not. And there are some really handy tools that we can look into in depth next week. And that will really help you dial in exactly where those stops should be and how to manage risk and how to manage the size of a position. So that's what's on tap. After that, we'll be talking about psychology, and then we'll be wrapping the whole thing up in a nice finished package with a bow on it for you. So that's what you have to look forward to. But I just want to touch on the keys here again. Step one, setup. What are we looking for? How do we identify it? And what are the specific criteria that we need to hit to take a trade? Step two, the confirmation. Basically, where do I enter? You enter when the trade setup confirms. So we talked about that as well. And that's obviously a very key component. And I think probably the most important one is management, or at least the toughest one, because this is where emotions are a much bigger factor, I think, because you're already invested, both literally and emotionally, and you're more prone to kind of sway the setup that you did in the previous two steps in this third step and kind of counteract that progress that you've set up for yourself, that success you've set up for yourself by letting your emotions get in the way. So when you exit and how you manage the trade is very key. And the big thing is just when you loop all of these together and, kind of keep expanding out and loop them into the other concepts we've talked about, in the same way that we look for confluence in a trading setup, multiple factors combining together to inform a bias, these multiple factors that we're talking about in these lessons will help you build confluence towards a successful trading career. So, like I said, next week we've got position sizing made simple. If you stick to these, you will never blow up again. Usually blowups happen because we don't stick to rules, though. So, your mileage may vary, but these will provide a very nice framework to pragmatically approach every trade and to manage your bankroll in a way that will be most conducive to compounding it going forward. We'll be talking about the 1% and the 2% rules, and we will be working with some position sizing calculators as well to show you in action how I use these tools to help me throughout a trading day. So I don't have to spend all my brain cells doing a bunch of math on how many shares of this small cap I can buy if it has this projected move in X, Y, and Z. So some useful tools and all of that. And that's what we have to look forward to. So I'd like to take any questions real quick, and then we can do some live charting as well. And sorry, guys, I see the chat's been popping off here. My boys, Mike, Talk, Wellington, appreciate all of you guys. I've been flying blind here, so I've been flying blind. So yeah, we are going to take a second here. I'm going to get some water, and then I'm going to be going through all these questions. I think I see. Yeah, Tim, you're my hero. You're starring questions. Perfect. All right, so we're going to start with those once I get back in just a second. All right, folks, we are back. We are hydrated. We are ready for some questions and some answers. Let's get into it here. So, can you show the chart? Yes, we're going to be getting to that next. I'm just going through these in order. We're going to be getting to that right after the questions. We'll walk through the setup I took today and any questions, any ways you guys want to connect it to this lesson. We can talk about all that good stuff. So Mike P saying he hates range trading. It's hard for me. I get that. I think it's just me as a person. I am a little bit of a doomer, I guess you could say. I always expect things to kind of not work. Not always, but I just expect things to take a little bit longer than they might otherwise. I always expect things to kind of revert back to the mean. I guess I'm that classic nothing ever happens meme, they actually modeled it after my face, glasses and all. So it makes sense. It makes sense. It makes sense. Okay. Sorry. I'm just checking in with Tim there. All righty. Perfect. Okay. So yeah, Mike's talking about the bumpers in range trading. Absolutely. So yeah, it really is like bumpers because when you're in a range, you're usually in positive gamma. When you're in positive gamma, that essentially means that all moves are muted. They're usually to the upside, but they're muted. And so what that means is that there are going to be more algorithms coming in and basically capping gains and capping losses and keeping things in a tight range. So I think it really helps to have these kind of visual metaphors, like literally, okay, rails up, we are selling at VWAP, we will fade the reversals and we'll take them back into that equilibrium there. So yeah, I'm always a big fan of these kind of metaphors because that's what clicks for my brain at the very least. My boy Mike saying he cuts his size in half quite a bit depending on certain variables. Absolutely. So something I love to do is add in if I was early but not wrong. I never add in if I was wrong and I just feel bad about it. That's how you really dig yourself into a hole. But if you have your emotions in check and you're not taking too big of an initial position, you're able to assess that and you're able to basically add in. And then when you get back to break even or get back to VWAP, that equilibrium, you can take that right off. And I had to have a shift in my mentality from looking at it like, well, man, if I just held that second ad, I could be up twice as much, and shifting that to, well, the downside of that is catastrophic. And the upside to taking this off is I'm just paying myself. I'm just sticking money in my pocket. I'm just pulling money out of the ATM that is the market, and I'm funding my bankroll for the next high conviction trade. So I think it's super, super important to trade around those positions. Mike likes when it consolidates because it tells him that it's priming up to go somewhere. Absolutely. So the longer the base, the longer the space. The more everybody gets so sick of a stock that's just range trading day after day, week after week. I'm sitting over here rubbing my hands together going, man, when this thing moves, it's going to move. And the longer I keep it on my radar, the more impulsive traders it's going to fall off of theirs. And I'm going to get an even better opportunity. And then I get all of those impulsive breakout traders to rush in like the cavalry, and get my back when the trade starts to work. And I can just ride those guys and their momentum up and quite frankly, use them as exit liquidity when it's time to take profits. So really good to just think about what cohort of traders are in at any given time. And when you have consolidation, you are trading with long-term investors and smart money. When you're in a breakout trade on like a meme stock or something, you're with gamblers. So I'm not saying don't gamble. I gamble every day to some extent or another, but I take very calculated gambles. We are informed gamblers here in the market. I will never tell you that it's not gambling, but I will never tell you that it's flipping a coin either. If it is, you're doing it wrong. So Mike abandoned all his rules on Tuesday after going red in the pre-market. But then he dialed back in around lunch after his appointment. Okay, you were pissed and you started revenge trading. So yeah, so the emotions, it's so easy for them to start affecting you, right? And once they do, it's really hard to shake. So for me personally, I know myself enough to know that I get emotional. I'm an emotional. You might not be able to tell, but I get pretty emotional at times. So when I feel that inside of myself, I just say, hey, I know that I'm not going to be making the best decisions. Probably the best idea is for me to take a walk and recenter myself and get back to the place of being the trader that I know I can be. Because when I'm trading on emotions, I am handicapping myself severely. And, we wouldn't take a trade if we knew there was a big seller hammering it down every time. We wouldn't take that long. So being at the whim of your emotions is kind of like a seller in its own regard. It's a negative influence on the results that you're looking for. And because of that, we just need to avoid it. We need to be out of the market when that quote unquote seller is there, right? When that emotional pressure is on you, figure out how to fix that. Usually it won't be through the market. If you're revenge trading and get a big win, then you've got a whole other problem on your hands where you might just give it back because you're swinging from one emotional extreme to another. So great point, and good on you, Mike. You sound like a very self-aware guy who can recognize this. So V-Sync starring his own comment. We're going to move right on past this. We don't need to get into my politics. That's no fun for anybody. Mike P, 2 pips below the last low at the beginning for me until I started making profit. Then you adjust it. Okay. So yeah, it is important to dial in and see what works for you. So it sounds like, Mike's talking in pips. So we know we got a pro Futs trader in the house here. Whenever you hear pips, you better listen because that guy knows what he's talking about. And of course, he loves VWAP because he knows what he's talking about. And daily anchored VWAP is great. Also, I love the 2-day anchored VWAP. That's super cool. You can be like our boy Michael Noss, CMT, and trade from the 1-day to the 2-day and play those mean reversion, highly consistent moves there. Those are always good plays there. You can see them every single day. You'll get a whole list of potential setups on your scanner. You can wait for them to trigger. You can just start stacking those consistent gains. Absolutely. All right, my boy Talk saying, Steve, depending on your trade time frame, what indicators do you adjust? Great question. So in general, I'm like many people where essentially I start out with a lot of indicators and think the more information on my screen, the better. And then I've really kind of honed that in. And so honestly, most of the indicators I use I don't adjust them very much based on the time frame. So in general, I always have the 200 moving average on my screen. I always have the 9 EMA and the 20 EMA. Those are my short-term trend indicators. The 200 is a more substantial trend indicator. Besides that, things like ATR I use very frequently, and that's always, an intraday calculation. It looks back through a certain window of trading days, and then it extrapolates what the potential moves are on that given day. In general, I don't really change that much depending on time frame, to be completely honest with you. And I think that might be an ideological thing on my part, where I think that the market is very fractal in nature, where I see the same setups and the same market mechanics happening on a 1 minute chart or even a 1 second chart. If you really want some adrenaline, you watch that 1 second chart and you just see, it's crazy seeing the same formations that you see on those low time frames up on a daily or a weekly chart. So for me, I really am a firm believer of, as above, so below, so to speak. If these patterns are functional on a low time frame, they'll be functional on a high time frame. If these indicators are work on a low time frame, they should respond on a high time frame. I think it's more about stock dependence. So I give indicators different weights on different stocks just based on what they're responding to. So if I see a buy program on a stock off the 20 EMA on the 1 minute for like an hour, I'm going to keep buying it off the 20 EMA until it stops working, until that buy program turns off. So that doesn't mean that every stock in the market is doing that though, right? So I think it's more important to remember that these are all guidelines and tools to measure what is actually happening in a given market, in a given stock. So I think it's much more specific on the stock than the time frame. I don't know what this means, but I am later, so so pray for me, boys. Talk is a turtle trader, best used for long-term setups. Okay, interesting. So I actually don't know a ton about turtle trading. I know there's the book. I know it's a very established system, but we'll have to talk more about that later, because I hear a lot of good things. I know a lot of very successful traders call themselves turtle traders. I just think it's a cute name. So I'm pro turtle trading, but I don't know very much about it. It has been quite some time, and I am in search for a holy grail setup, which would give me returns of 70%. Wellington, you and me both, brother. You and me both. I think everybody's looking for the holy grail, and I think that's why they call it the holy grail. So what I would say is mean reversion and shooting for less extreme targets and just taking these kind of base hits that appear very regularly, like returning moves back to VWAP or these fake breakdowns. Those are my two biggest plays. And they work very consistently. I don't have the numbers on hand. I would say over 60%, 70 plus, maybe is pushing it. But you run enough of these and you will compound very regularly, because it doesn't even matter if I have a 50% win rate, because with a 50% win rate, if my risk reward is 3-1, that's money in the bank right there. And then anything on top of that is just the cherry on top, right? Kathy asking a very good question. Next Friday is 4th of July. That I was I was thinking it was Saturday. Shoot. So I will have to double check. I will have to double check on that. I will let people know in the Trade the Pool Discord. Yeah, I'm not sure. Is the market closed? Is the market open? I guess we will see. So we're going to say, I'm going to say no for now, but we will do something on Discord that day and on the 3rd after the early close. So it sounds like market is closed. Apologies, guys. I've been on vacation and then had some family stuff that I had to deal with. So I'm a little bit out of it. You can probably tell this was not as polished as usual, but I see 88 people here, and that's the number right about when I first checked maybe an hour ago. So I really appreciate you guys for sticking with me here. And it's only going to get better from here. So thank you so much, guys. Let me hop over into the live questions and we will talk about anything I see there. Okay. Yeah, I did just get confirmation that the market is closed and it's a half day before. So safe to say no webinar on Friday, but we can probably do it Thursday. I got to double check and make sure that's okay. But if at the very least we'll have a Discord thing going on, I'll be there. We can talk about whatever you guys want to. and it'll be a good time. Okay. Bear with me 1 second here. Okay. Wellington saying he's been studying. Okay, I've been studying ICT setups, and your breakdowns are very helpful. Thank you. I see a lot of other content creators with their own strategies, sometimes even downplaying ICT methods. Yeah, I see that too. I think a big part of it is that Michael, the creator of ICT, he is very, very opinionated and he is very, very dogmatic. This is somebody that I've probably watched over 100 hours of content with. I've worked with his system extensively. He is in some ways an amazing teacher, and in other ways, very, very polarizing. So I think a lot of people try to distance themselves from these concepts. Another thing is, I think that this might be a hot take. I don't think he invented these concepts. I think that that he has a very articulate way of defining them and kind of isolating these kind of more generalized market generalized concepts of the market. So for example, he will say order blocks. I might just say this is a zone of support, right? And I do use his rules for order blocks, not dogmatically, but I absolutely do use his system very regularly. And I have nothing bad to say about the system outside of grain of salt with everything, I think. So it's interesting seeing you basically mirroring my thoughts on that. So, and I do just want to clarify, what we'll be doing on Thursday, the day before, is the general Discord event. Nothing crazy special, but it'll be a lot of fun. It'll be very, very informative, and I will be there. That's all I can guarantee. Also, on Friday morning, it sounds like we will as well. Oh no, Tim is memeing on me. Let me see what's going on here. I can't see the bottom of the meme because of our boy DJ 2 a.m. Where's his comment? All right, let me hide that. Oh, that's real. That's real. So hopefully top picture, but worst case, bottom picture. There's nothing wrong with ramen and candles. That's great. All right. Okay. Let me scroll on back up here. What's up, Tyler? Good to see you. You are late, but that's fine. We recorded it, and you're just in time for questions if you got anything. Mike P saying politics suck. I agree. Let's never talk about politics. That'd be a win for me. Okay. So today's trade, Talk saying, like today's trade, we went up on no real news, kind of like a battle that's going your way. Sometimes it's a trap. Exactly. So that's where, I'm not sure if this is what you were referring to, but what jumps to my mind is when I was talking about when something just isn't sitting right with you. And often it's that grind up where it's like, yeah, we're going up, but there's not the real oomph. There's not the volume, and there's no catalyst. Often that means that it is going to be reverted on a catalyst that will take people by surprise if they don't have that kind of spidey sense tingling that maybe says, hey, I'm going to lock in gains here. I'm going to wait for this to settle. And so, yeah, I'm totally with you. I'm like I said, I'm pretty jaded. I'm always looking for traps. I think the market is incredibly efficient at separating us from our money. So, so yeah. So look for opportunities for the market to screw you a little bit. And often those are the best opportunities to go on the other direction there. So like I said, for me, I didn't catch the move down. I wasn't even on my radar, but I didn't like the price action in the morning, so I wasn't long either. And then I did make my money and catch the long off the low of the day to VWAP. And that's where it's like you can kind of filter out the lower probability stuff and just wait for your fat pitch. For me, it was a fat pitch. It was slowing tape, slowing selling volume into a key support and into a key ATR range. And I had a clear target up ahead. And I said, hey, I don't know what's going to happen. I'm going to send it though. So what else do we got here? Yeah, Mike, the 2-day VWAP is very cool. Check it out. I think you'll like it a lot. And if you need more advice on that, Michael Noss, he's just an absolute repository of information. That dude is a walking encyclopedia about trading. He uses the system every day, so I'm sure he'd be more than happy to answer questions or talk about it on stream. Catch him every day on Trade the Pool, and yeah, that's his spot. He's trading those systems live every day. Mike saying he uses the 9, the 20, the 50, the 200. That's exactly what I use. Sometimes I wonder why I even bother with the 50, but then it still responds a good amount. So I keep it on there. I don't have a problem with a few extra lines, but yeah, these are excellent to have on your chart. Personally, I like the EMAs for the shorter ones, the 9 and the 20s, because they're more responsive. And I like the simple moving average for the 200, but that's mostly a preference thing. Okay, my boy Robot, he's got the 6, the 18, and the 180. Interesting. So this is probably, I feel like that's something to do with some kind of fib ratio or something. I used to trade a 6, an 18, and a 27, I want to say, and that was pretty cool. But same basic concept here. He's got his 2 short-term ones, a 6 and an 18, a 9 and a 20, essentially the same thing. They're telling you the same thing. And the 180 is essentially a longer term 200. So yeah, totally with you. Again, this is very preferential. For me personally, I have a whole system built on 27 EMAs on every time frame projected onto whatever time frame I'm trading on. And that's just been trial and error over the years. That's what I really think is very responsive. So I keep the basic ones on my screen, and then I have a whole other indicator suite of this 27 EMA that I very regularly trade off of. That's we can talk about that too when I go over the trade that I took today. So good stuff there for sure. Tyler Smith saying it's a wild market. Lost on Hood today when that news hit. Yeah, that was tough. I think Tim actually made money on that short. So blame him. That's what I usually do. But NVIDIA worked out good. Yeah, nice move early on NVIDIA for sure. Good stuff. DJ2AM, I appreciate you very much. You're letting it get to my head. So I gotta ration out your praise, but as always, I appreciate you. What else we got? Eau Claire Capital on Twitter was talking about buy programs. Yeah, buy programs are very fascinating stuff. You can identify it's a really useful tool to identify on shorter time frames where the key levels are that a buy program steps in. And that can usually often it'll show as you would expect a pattern to do one thing, but then something happens where every time it reaches a certain level, often a 9 EMA I found is very responsive to short-term buy programs. You'll just see somebody just saying, hey, no, I know it looks like we're going down, but I'm buying here. Then it pops up off of that, comes back down to that 9 EMA. No, it looks like we're just grinding up, but we're buying here. And you see the volume just stacking up and up on these orders. And you can just keep riding that trend until it stops working. Today, I rode that trend just about all the way to VWAP. So good stuff there. I'll have to check out Eau Claire Capital. DJ2AM took some profit off BBAI this morning. Nice trade, I would assume. Let me pull up my chart and we can start looking at charts. And then I got a little more time here and then we will wrap it up. So bear with me 1 second. BBAI. This is such a fun name to trade. Big Bear AI. This one, SOUN and AI, they all move in tandem. They're all beautiful. And boom, look at that move. Excellent. So I'm going to switch over to this screen. So before I show it, DJ, if you are in the room still, which I think you are, I want to know why you took profit where you did, because I know I'm seeing some key levels here. And bear with me, get this up. There he is. So yeah, I'll pull up the chart, but I am curious to hear your thought process. And I'm gonna do a little split screen action here. So the ratio is a little funky, but bear with me. I got to do it to see your questions too. So we have BBAI here. These were my levels. I haven't looked at this chart in all week, actually. All week. I recommended keeping a very close eye on this volume shelf that was building out here at slightly over $4. And so we have that key level, that 4 level. We have consolidation above it. And now we have expansion right up to the equilibrium of the range from the high to the low here. This is the 50% point. And if anybody doesn't believe in fibs, look at that. Look at that precision. Just about to the penny. Very clear that there were sellers waiting for this 50% level to kind of bop it down. So we gap up into it, come down, we hold above our moving averages on the daily, we surge again, we undercut it, and now we close. That's a very bullish close to me. I think these have lots of room to expand up. And all right, DJ is saying, I tried to wait for confirmation like you did and jumped in at 594. All right, caught the top and it went down. Okay, did I misread? I thought you were already in and you took profits. Let me go back to your initial one here. Oh man, you guys are chatty today. It's way up there. Okay. Doing just one trade a day right now, trying to up your knowledge. I love it. I love it. You are on the right track. Let me zoom on back here. Hey, you know, it happens. It happens. That's why we drill this stuff, right? Because you caught yourself maybe a little late this time, but you'll catch yourself a little bit earlier next time, and that's what it's all about here. That's what it's all about. So, let me zoom on back up here. Man, you guys are chatty. I love it. Okay. Oh, we got somebody else that's a Marvel bull. Nice. Let me look at that real quick here. It's just grinding on up. Oh, chaos chart here. But if we zoom out, a little more clarity. Excellent, excellent. Undercut the 50 here. After a blow off top here, parabolic move, came back into the base, into the big volume shelf, looking like it's setting up for more expansion. What I would do now with these old crayons is I'd take my fib and I'd redraw it from this swing high to this swing low. And we are still in the value zone, in this golden pocket. We are reclaiming monthly 9 EMA, 9 or 20 EMA. What else do we got? What else do we got? Surging back over the 200 week. Very nice. And next stop is a date with this 200 moving average. It looks like we closed the gap and are responding to it. Oh, we still have a little bit of room. It's right at the 200. So next week, what you can look for is some of these imbalances here to the downside to get retested. Maybe it comes down like this into this rising 9 EMA, and then you can take, I'd probably play options here and target this 83 handle. So I think that there's a big draw up here. And you see this big empty space here. As long as it can get over 80, it's going to pop to 83-ish, 80 or 85-ish pretty darn quick, I think. So that's a fun trade. That's a good setup that we can look for. I like those 100 calls for August. A little aggressive. What's the delta on those? Probably under 3 at 3 maybe. Maybe a little aggressive, but I could definitely see it happening. This is a big level, 93. Then it's a little bit of a low pocket at 100, so it could easily pop above that into like 103. So yeah, I'm going to be keeping an eye on this because I want to be looking for the laggards in the semis that I think have a lot of room to go. All right, DJ, I'm still praising me more. I don't need to pull that up on screen, but thank you. I will do my best tonight. Okay, Tyler, cut down on the amount of holdings he has so you can pay more attention to them. I think that's a great idea. I think I do my best trading when I have 4 to 6 positions open at any given time max, and often when it is a lot less than that, you know. Going on down here. Talk, you make me laugh. Yeah. You know, sometimes I can't be glued to the screen. I want to just always be glued to the screen, but every once in a while life gets in the way. So all about balance in most things. Did I close the coin trade? Great question. Let's talk about it. So coin, man, what a beauty. I still have an open position. I'm watching this 350 level. It seems responsive. There was a big imbalance, see, between these two candles here. Totally fine for it to revisit and wick in there a couple more times. I think it's waiting for the moving averages to catch up. I think it wants to consolidate via time before pushing higher. There is a chance that this zone here rejects and that we need to retest some of this poor structure. That would be valid and that would be fair. And I would be looking to add there, believe it or not. Why is because I went with Con L and I bought in right about here at 24 even. So let's see, 24. So I was up over 100%. I was up 115% when I sold a big chunk of that. And I was basically targeting this collection of highs here. I've completely free rolled the trade. And I think that coin, pull up the main chart, is going much higher. I believe that there's a very high likelihood that we are going to keep surging to sweep out all-time highs at 420, 430. Then I think we're going to back test somewhere probably right around 350, maybe a little deeper. Let's call it that for fun. And then eventually break much higher. I believe this is a pretty textbook cup and handle pattern here. I think we're seeing the same thing on hood, but a little bit later. As you can see, I have a very similar line. I have I had a very, very strong conviction that we would tag this level. We did, and we were seeing some sellers, as Tyler saw. So I would not be surprised if it overshoots a little and then undercuts pretty severely. And this is an area where I'll be looking for big positions on things like hood, things like coin, things like Roblox, I believe is another. Roblox still has a ways to go. But again, these are all setups where you just get the expansion up to those all-time highs once the liquidity's there, once people are ready to start making the move. So for coin, I am still in with a, I forget if it's half or a third. I think I still have half. It was not a great day today, but I think it's okay. And I believe in the trade. So still in most of it, completely free rolled. What I think I'll probably do on Monday, especially if we see some weakness, is I will book the profits on CONL, the 2x leveraged one, and I'll just switch to normal shares. So just de-risk a little bit, hold my position. It'll still be on my radar, but it'll be less likely to pull a HIMS on me. Showed you my good trade. I'll show you my bad trade. I was sure this thing was breaking out. I was so sure. The market was too, till the news hit. Boom, just major gap down. I got stopped out at open for a massive loss on that position. Luckily, I was taking profit up here, but not enough. So this was overall, I think it was bad. It was like 25% loss, I think, on the position. Yeah, 45% down overnight, and I had booked like 18% on the upside on half of it. So not great, but you know, coin balanced it out. Thank the Lord for that one. So that's how I'm managing the coin there. Where's the cat? The cat is out in the yard. The cat, she's on probation. She got a bird yesterday, so now she has the bell around her collar and she hates it. So so that's where the cat is. Next week I'll bring the cat. What else do we got here? Mike, you're too kind. I am not a pro. I've been doing it 6-7-ish years, but I don't consider myself a pro at all. That's reserved for the 15-20 year veterans. Those guys are the pros, and I still learn a ton, not just from them either, from you guys too. So thank you, but you're too kind. Always be looking for more information, more insight, other views. I am by no means an authority figure. All right, what else we got? All right, yeah, Catalyst is one of your 5 criteria for A+++ setups. Absolutely, got to have the juice. Okay, we have a request for please make a video on how to select stocks. I would love to do that. What you can do is for now is refer to my VCP, my volatility contraction pattern webinar. It's one of the first ones I did. It was probably maybe 3 months ago by now. But you just search volatility contraction pattern or VCP pattern, trade the pool, it'll pop right up. And that'll show you the main system I use to find swing trading setups, and also how to actually screen for them yourself. It has all the parameters there. If you need any help with that, you can shoot me a DM on Discord and I'd be more than happy to help you there. But yeah, VCP setups are excellent. They are very high probability, and they are how I caught the coin move. This was a very nice volatility contraction setup here. What else? Yes, Mike, blame Tim. Always, always. He does so much. So I don't know. It's totally not fair, but I do it anyway. No, Tim's a rock star. What else do we got? Oh, my man was journaling. My man was journaling. Let's see. One sec. All right. Mike P loves Fibonacci's. Hell yeah, brother. I'm all for him. I think that's, if I only had one tool that I was allowed to use on my charts, it would be Fibonacci's, because you just get so much information from them. Good stuff. Good stuff. Bill R saying, do I ever trade orbs if you're around open? Yeah, absolutely. So I love trading orbs. We can talk about them real quick. So an orb is an opening range break. You can play them on a 2-minute if you're really aggressive. You can play them on a 5. I like to play them on a 15. And what just like my normal trading strategy is playing the 30-minute orb, because I find that often you will get a range forming in the first 30 minutes that is then broken. So let's go over that real quick. We can pop to a 2M. Well, it's 2 months, 2 minutes. There we go. So the first 2-minute candle here formed a nice range. We can mark that out. There's the high. There's the low. What we kind of observe is overnight we had a gap up, and this is just framing the trade. We undercut, and then so we are either looking for a back test to reject if we're bearish, or a pop above and then a hold above and a push through that 2-minute orb. So the 2-minute setup, you would be long right here. You'd be getting in under VWAP. That's always nice. You would catch a very explosive move up here. And where would you sell? Well, these green lines here are my ATR levels. These are the levels where it is very likely to start reversing around if it is not like a crazy outlier day where, it's just an insane catalyst-based move. So for me personally, if I did take this trade, I did not, but if I did, I would be in right here, and I would be selling some in here, instant top wicks. That helps me know that we are not on a crazy outlier day, because there are sellers stepping in at the first test of this ATR level. Then I'd be watching my 20 moving average. As long as candles are closing above this, like this, totally fine. This might have shaken me out of a partial. Not really sure. I probably would have waited for VWAP or waited for this low to break. Since this low didn't break, I think I probably would have held in here and pretty quickly started seeing bottom wicks off the same zone. I would have drawn this zone out like this. As long as this respects, I'm in the trade. Reclaim the moving averages, good to go. Take more off here. Then we have a topping pattern here. 1 push, 2 push, 3 push. And I'm noticing the red volume starting to peak higher. We had a consolidation of volume here. I don't know if you can see that. Right in this circle, volume's consolidating, and then red is the volume that breaks that. So that's a little warning sign. We did hold these moving averages, but whenever we are above targets and we get 1 push, 2 push, 3 push, I am on very, very close alert, because either it's going to straight squeeze or very much more likely reject here. So I would have personally been out probably when we break this high volume candle low here. So any runners would have been out a little under my stretch goal for ATR. Really clean, really clean, really clean. Love good price action like this. Yeah, and while we're here, we can talk about the trade I took down here and what I was looking at. Hop to a 1 minute. So this is where I started watching, because I just noticed that there was a buyer, but I noticed that we had a ways to go until we got into this yellow block here. And this was just a level of support, essentially a high volume node on a higher time frame. So I wanted to see what happened when we dug into here a little bit. So this was the first stick where I said, okay, I think that we have a bottom very close to forming here. So what I did, let me pop on my indicator. This is my 27 EMA suite. I said, okay, we need to break above this to get long. Full disclosure, I did not trade my system. I got in right about here because I saw this power stick forming, and close to the end of it, I just bought a chunk. I said, hey, this looks pretty good. What the actual trigger for me was this 1 minute engulfing. I was seeing bottom wicks up here, bottom wick here, bottom wicks here, And then when this power stick formed, it broke through here, and I believe it was a 5-minute engulfing candle. Was it there? Oh, it was there. So yeah, it actually wasn't a 5-minute engulfing. Again, it was not the cleanest trade, not the cleanest trade. But what kept me in it was saying, okay, there should be buyers around here. What I want to see is no 5-minute close. So basically, I could give it a little leeway. A 1-minute candle could do whatever, but a 5 minutes a little bit more substantial for a day trade, at least for a scalp. So I was saying, okay, if there's a 5-minute close under here, that's my stop. And it tried, but if you look at the 5-minute, no candle closed under it. So each time the 5-minute closed, and I literally set an alert on my phone for like 30 seconds before the 5-minute candles would close, just so I wouldn't psych myself out. Because I was like, if it happens and it surges below, I'll hear the alert that I set. Otherwise, I just want to see what it happens. So I did hear the alert twice, but every time I checked, it was already popping back up. So still in the trade. So now what I was looking for were the things that we talked about for a reversal pattern. So I wanted to see the general power dynamic shift from sellers to buyers. So we had this swing low here, and then I saw substantial buyers coming into the tape. They could not break above this high. So trend is still not bullish. We push back down. That is still bearish, a lower high and a lower low. But then I was watching this consolidation really tightly here, and I was noticing these high sells. They couldn't really seem to get any traction below this, and it was taking less volume from bulls to hold this line. So for me, this is short covering action. This is people taking their shorts into this high volume node on a higher time frame, this big block, and essentially trying to form a carve out a bottom. So here is where I started really thinking about adding, and I said, okay, if it can reclaim the 1 minute here, I'm pretty bullish. But the big level is this green level here. This is my hourly trigger. This is the one that really matters. So yeah, we swept under here. I added on the close above here when it back tested and started to wick back up. So I added, 611.60. And then I said, okay, now I have two tranches. I have a position from here and I have a position a little bit higher. When we get up to the hourly trigger, I'm not convinced that it won't just reject like this. So I'm going to take my add off. So I took my add off right on this candle. It popped above. And then what I could have done is added on the back test here. I did not, but I could have pressed the trade like that. But then I'm just watching my yellow line here, my 20 moving average, and this red trigger. And as long as we were above this, I had zero worries in the world. And I just set my orders up at VWAP. And I set another, I think, above this one here in this fair value gap. Yeah. So that's how I framed the trade. That's how I was, describing what I was looking for. The biggest kind of pivotal moment, inflection point, was I needed to see this high at 612.24 get breached. All I need is to see a candle close above that, and I think that we're good to push higher. And essentially, or even wick above it, I'm very, very interested in the potential continuation long. And the reason for that is it would be the first break of structure of these lower low, lower high, lower low. But now we get a higher high, a higher swing high before a pullback. So then if it made that, and as long as it held these rising moving averages, we were good to go. So we got the criteria right here for a long entry based on that. We popped above it, back tested and held. So yeah, as you can see, once we got that, it was just a very straight move. So it wasn't just me waiting for that back test essentially. So that is how I would frame the trade. And man, what a squeeze. I did not sell any up here. I was all out here, but that's fine. Sorry, I was rambling there, but it was fresh in my head, so I had the whole thought process there. Scrolling through questions. Mike P with the surfing or skating analogy. Absolutely, man. Yeah, we are riding waves, and we are in a game where you're not going to nail it your first try, and you're not going to nail it every try, but it's all about that progression and working on your process and identifying your mistakes and addressing them. Tyler Smith saying Marvell is his biggest holding. Okay. Big baller. I like that. After selling part of hood. Oh, my man. Very good. Very good. I'm a massive hood bull, and I'm essentially all out of my position. I just have a very small amount of shares to keep tabs on it, but what a trade, right? Beautiful stuff. Stuart saying is an AEVA bull. I felt like I missed that one, but let's take a look at it. Yeah, I missed this one. And I said I missed it down here too. So congratulations. Hope you're in. I don't know what the heck to do with this chart. That's a monster. I do know what to do with it. Slap a fib on it. Note the volume shelf right around the IPO level. Mark this out as a notable range. Take profit into 50. Round number as well. Easy peasy. Yep. Looks great for 50 as long as it can hold an hourly trigger. So over this previous shelf here, this high volume shelf that got built out, if it trades back into 34.50 or so, probably take a long or add to it. Crazy chart, crazy mover. And this is where I just trust the system, right? So if I'm in a trade that's working, say I get in somewhere around here, I expect this high to sweep. As long as it's holding over hourly trigger, this green line, I know there's a lot of chaos on this chart. Go ahead and hide. Whoops. Didn't want to hide all of it. There we go. So yeah, as long as it's basically holding this hourly trigger, as you can see, just very responsive. Sure, it did undercut, but then by the end of the day, it reclaimed. That might have scared me a little, this too. But in general, these are your kind of, why you kind of use these as trend following, or just extension trend systems to keep an eye on. As long as by the end of the day, ideally by the end of the hour, it can reclaim these levels, you are good to go. So just onwards and upwards, onwards and upwards. A little sideways action, but pretty darn healthy. And just every time this gets tight and it flattens out, boom, big pop. So you just keep on doing this. This one's actually a pretty wild mover, so it is undercutting a decent amount, which makes it harder. But in general, you want to have some indicator to help you kind of ride these moves on up. And maybe these stop you out, and then you just get back in on the reclaim. That's totally valid too. And then you'd be netting massive gains off this. So nice chart there. Talks watching what I am. Reddit, absolutely. I don't like UNH as much, but I have to respect the move it did today. 2% on a very low beta name that's been basing for a couple weeks. Very significant. Reddit. See, I almost bought end of day here, which would have been great, but I just didn't like these top wicks. And it looks like this kicker candle. I don't like this either. Do a key gap fill, but it does look like it's a grinder. So how I would trade this one is the same thing. Just this hourly trigger, as long as it's respecting more or less, then probably consolidate sideways. These very key moving averages catch up in the next week or so, and then it pushes up and starts sweeping these. Because this looks like it has highest short interest or something. Like these big surges up and then getting beat back down multiple times. They're trying to like prevent a squeeze. Reddit is also one of the names that is down the most from all-time highs out of the previous leaders. So there is still massive catch-up room on this trade. I'm a big fan. I was buying into this gap, but I sold very quickly into the 200 day. So not much there. What else we got? If Bitcoin goes down, then coin will go up. But I think coin is just gearing up for a larger move coming to Bitcoin. I'm not sure about the first part, but I definitely agree on the second part. I think risk on, baby. So long Bitcoin, long coin, all that good stuff. Let's see what else we got. Let's see. Michael Anthony is looking at Clover. That's a name I haven't looked at in a while. Let's take a peek. That's very significant volume today. There must have been some kind of catalyst, as you were saying. Yeah, one of the 11 best U.S. stocks to invest in under $5. Canaccord Genuity analyst Richard Close reiterated a buy that has $160 million in cash. Okay, let's zoom on out. Well, that's a pretty chart. That's nice. So you have the nice cupping bottom action. You have a explosive handle that did fail, but I bet if we slap a fib on this, it is retesting the 50 to the penny. Guys, just start using fibs. You'll start seeing them jump out at you. You're like, that's exactly halfway between these. All right, so Key monthly moving average scooping. We still are fighting downward curling pressure from this blue daily trigger and this purple weekly trigger, but it looks like it is trying to find volume back at equilibrium. This is a great place to start a position for a long-term hold if you don't go overboard, because this thing is a big mover. If it even retests the current range, that will be a 50%, or I'm sorry, a 75% gainer. And there's potential for a retest of this high volume shelf up here at $8. So I'm going to put this on my watch list. I'm going to do it right now, actually. Thanks for the heads up there. All righty. Is that my catchphrase? I could work with that. It's not a bad catchphrase. Slap a fib on it. I need a sound effect like a Guy Fieri, like bow, bam, something like that. I don't know. Long wicks are an indicator of where she may go. Yeah. Where is that sound? Is Tim doing audio production now too? I don't know if you guys could hear that or if it's on my end only. Oh man. Let's see. Okay, all right. Tim's trolling me here. That's what's going on. That's okay. I deserve it. Chris, good to see you in here, man. Christopher says, today I saw that it broke the $100 barrier. Should I hold strong or start taking profit? And how do I know what I should take, as I don't need money, but I want to leave money on the table? Chris, if you're still around, let me know what stock this was. Sorry, there's so many that we talked about that I didn't catch this one in real time here. While you do, if you are still here, let's talk about EL. This is a Estee Lauder. Okay, so this is going to move with things like Lulu, Ulta, basically consumer discretionary retail. I see a big old trend line that I want to check on. Look at that. I swear this stuff just jumps out at you after a while. Who needs lines when you have brain? Okay, so it's testing a key breakout. We have a nice curling of all of our key levels here. Often you can get a pop and then a rejection. And this one feels a lot better to buy, but sometimes you miss it and it just goes like that. So if you're in it, great. If you're not, I would wait for a back test of these confluences of support. We have a big volume shelf starting at 75 and digging down into 70. So 70 to 75 is the buy zone for me. I could not buy this now, but it does look like it more than likely would work. I think it is not a bad setup. Captain Sunshine, we can commiserate. I am long A-Lab, and it is being very obnoxious. Look at those weekly sticks. Top wick, top wick, top wick, top wick. I thought each one was going to break out. I am in from about 94-ish. So I don't have the best price. I'm red right now. But as long as it holds the 200-day, that test a couple days ago was very positive. That was what I was waiting for. I missed it. I did not enter here. My order was a little bit lower and did not fill. It was right here at 84. Thought it might undercut, but I love the strong response off the first tap. This will keep curling up and it should provide a rising support. And we should see buyers starting to step in under 90. So unless that changes, I am long A-Lab. I think it is very good risk reward here. Nice cup, nice handle, nice moving averages crossing over. And on a higher time frame, since I'm just in shares, I think this has potential to be the beginning of a very large base. This whole thing, just a base. And I will be trimming heavily into this 110 gap. But I think that we could go significantly higher, and it may be forming some type of channel. It's not perfect, but you could maybe not expect, but in a perfect world where everything goes right for A-Lab, we could be setting up for a very significant base break move here. More realistically, I think it probably does something like this, and then comes down like this, and then pushes up much higher, like in a year or two. But yeah, I like the stock. I don't know a ton about the fundamentals, but yeah, not too shabby. I don't have to lie to you though. I do think it is going up. Not fun though. Not been fun when everything else is ripping. This is my most unfun position right now that him's beat me up and kicked me out. Michael Anthony saying, shouldn't Clover rebound more today with a profit in May compared to October, since it made a profit this quarter of 0.05 or 5 cents? I do not know enough about the fundamentals. What I do know is that we were traded back into a key level. It got apparently a bullish catalyst today, and there was massive volume here. What we can do is look in a little closer at the hourly, and that looks pretty compelling to me. If it can hold over 277, 78-ish, I think there's a good chance for at the very least a retest of this $3 area here. Yeah, I like it. Mike P is also a fellow musician. Yes, sir. Absolutely. Playing about 10 years. I still suck, but man, do I love it. Captain Sunshine. Also do NU. You are in at 12 and change. Are you Sam in Discord? You're in the same stocks. Let's check it out. I love new. I'm still in this one. Not a big position. I'm in from 12 and change. Same. Yeah, I love the stock. Love the chart. I think it's got a great narrative. I like having exposure to Latin American markets. I like having exposure to what do you call it? Fintech. There you go. I think that they have a lot of potential. I see a VCP pattern here, big thing, small thing, getting even tighter here. It is respecting just about everything, coiled for weeks under the 200, so it's very constructive. This coil happened on top of a larger flag pattern, and when you zoom out, this is the most important thing for me. Textbook, massive cup and handle off IPO levels. I mean, just absolutely perfect chart. I believe this thing will be a double in 6 months to a year. So I love NU. I will continue loading on any pullbacks as long as it holds key levels here. Right now that's 12. So yeah, absolutely love the stock. Mike trying to hurt me, bringing up hymns. We don't talk about that. Thank you, Mike. Take a look at Soun, S-O-U-N. What did it do? I thought it was going up, and it is not going up. It is very tight, though, and we do have a lot of options flow. And again, I think these have heavy short interest because there's a lot of flow, and they keep opening high and then getting beaten back down, but only to key support levels. Mike, you're good, brother. You're good. It's just a little soon. Okay, so Soun, I think this is a valid wedge back test here into key support. I think that we are going to be looking for continuation on BBAI. And if we get that, these names can catch up. I'm almost more inclined to just play BBAI, but I like the chart setup on AI and Soun more. And those are very similar. Yeah, very, very similar charts on these. Both have massive upside. AI had a lot of flow on, I think, monthly dated 30 strikes, maybe August 30s. And they had weekly 25s coming in as well. Those ones look like, I guess they bought them yesterday. They probably sold it open. Probably made some money, but no big gains there. So this is still on the focus list for next week. What else we got? We won't talk about it. Captain Sunshine. All right. Any thought on CLS or power? Yeah, CLS. I have a lot of thoughts because I was in at 14 and I sold at 24. So I'm a clown. That's my biggest thought. Look at all my lines and targets from way down here. You ever want to be depressed? That's depressing. Jeez, look at it go. I mean, it's an absolute powerhouse. It's got an incredible narrative. They're they're poised incredibly to make a killing off of AI. They basically are, they were one of the first and most prominent use cases of, what am I looking for here? Industrial AI, essentially. That's not 100% accurate. And, I'm not a big fundamentals guy. I do know that they have an incredible business model, and clearly the market's been responding amazingly to it. I don't know how to really chart something like this other than if you're long, stay long. If you're not, pick a spot and have a tight stop. It's an absolute parabolic mover. It probably continues to do so. I do not see anything other than massive accumulation on this first dip. So This is a unicorn. It's probably going to keep going. Not a bad idea to have a small allocation of it just because it's basically Palantir, right? But sheesh, hard to buy here, right? If it gave a look back into previous highs or into this daily trigger, I'd be much more inclined to. But man, what a mover. Power looking a bit more constructive, still pretty extended. Heck, man, that's another parabolic mover, strong stock. I don't know what they do. Probably. Oh, this is Quanta. So is this data center stuff, I guess? Or they do like what? Construction for data centers? I don't know. Something data centers. So yeah, obviously huge narrative name, crazy mover. I like them. I can't buy them here, but I like them, you know, that kind of thing. Talk saying, Steve, we will put on the next trade for FNMA and FMCC. What's that? Fannie Mae and Freddie Mac? Yeah. Off News Catalyst. I am very curious. I'm going to pull up the charts and see what I see. Wow. Why have these been off my radar? Clearly, I noted that this was a base break potentially. Never traded it, that's for sure. Would have been a 5-bagger. Easy money. Heck, crazy. I'm sure Fannie Mae is very similar. Let's take a look. This doesn't look like the right thing. Is there a different ticker on TradingView? Did I have the right one for FMCC? Yeah, that's Freddie Mac. FNMA. Did I just mistype it? Guess I just mistyped it. Typed it. Okay. Yeah, that looks better. Much yep, same line. There it goes. You guys are hurting me today. All these trades I missed. It does look good. It looks like it can go higher. And these things got beat to hell and back. I mean, don't let anybody tell you there wasn't a bubble. Okay. What else do we got? Yeah, it is depressing, Mike, but you know what? It's all part of the game we play. What can we do? All right. Yeah. Flex on us. You deserve it. You deserve it. Bought under 80. Absolutely amazing. What can you say, man? What can you say? All right. Flowers to you. Golf clap. I'm past time here. Anybody have any final questions? Go on and get them in. I'll take a few more minutes here, and then I'm going to head on out and start my weekend. Meanwhile, while the last questions are coming in, okay, Christopher wants to look at RCL. RCL was probably the ticker he was mentioning too. Let's look at that. RCL. Wow. Yep. Crazy. Another one that'll keep me up at night. Yeah, I actually shorted this thing at 110 into this trend line, and I made a good amount. I made like 20%, and then I just didn't buy it, even though I knew it was an absolute juggernaut, and I knew it was time to stop the short. But yeah, incredible. It looks like it's going to keep going too. Just absolute parabolic mover. These are the industry leaders. They're doing it right. You want to be in this and not like NCHL, I think it is. NHCL. I'm so dyslexic. What's Norwegian? NCLH. There it is. Yeah, look at the discrepancy there. Absolutely wild, the underperformance here, or the outperformance by RCL. So yeah, man. What can you say? Sorry guys, I'm a little low energy here. I think it might be that time. Thank you, Talk. Love you too, brother. Steve from Stewart, we got Steve. When you looked at AEVA and mentioned taking profit on the 50, would you sell all of the stock that you would own or take a percentage? What we do personally. Thanks. Absolutely. Let's take one more look at that. So it depends on what your cost basis is. I'm assuming you got in. I probably shouldn't assume when you got in. You got in at some point and you're up for sure. Congratulations. This is massive accumulation. I would not expect any level below really 30 to retest personally, at least not for a while. Would I sell all? No, I wouldn't sell all. This is explosive and could easily just keep grinding up higher and higher and higher. looks like this is a legit enough bottom that it eventually will sweep out the highs here. So if you have patience, this is a pretty high probability 3-bag. There will be a lot of volatility on the way for sure. But yeah, so basically what I'm looking at is on the monthly chart here. This is a major area of consolidation, and more importantly, the IPO consolidation here. This will be a major level that needs to digest. That being said, we have so much juice and volume that it could slice through relatively quickly, and I would not want to assume that there would be a prolonged pullback and miss it. If you are close to free rolling your position, if you would be free rolling your position into 50, what I'd highly recommend is selling half of your position, making it so you cannot lose on the trade, even if this company goes bankrupt, and then just hold on to those and trade around that core position. If that's still a large position for you, maybe take 3/4 off and leave a quarter. The idea is to keep exposure that's completely paid for, and then you can hit a home run on that last quarter, and it'll be just as much of a gain as the 100% on the 3/4, if that makes sense. That is how I would manage that. All right, guys, I don't know about you, but I think it's time to start the weekend. I hope you had a good time. I hope you have a great week. I hope we all make money together. It's a short week next week. We're going to have a good time. Fireworks. I don't know. I'm very burnt out. I love you guys. Thanks for tuning in. Thanks for staying. And yeah, have a great week. Take care, y'all.